Yo, yo, yo. What's up, everyone? It's been a little while for me going live. I have been active, but I just haven't been live. So I'm back. So we can talk about the banking sector. So if you're tuning in from Facebook or YouTube, be sure to drop a comment, drop a like, share this video. I had to go get my hair cut. I'm looking young again. I had one of the kids that I used to work with see me today when he was working at his job, and he remembered my name and everything. And I was just like, man, I must got them good genes. They holding up right now. So it's been life is good. Life is good. So I'm gonna go ahead and kick this intro, and then we're gonna get into our topic for today. We're going to talk about the banking sector. We're going to talk about the risks there and if those are some equities or stocks that you should invest in. So let's go ahead and kick this intro right now.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, we are back. You are back with the Money Level Show, where we think, act, and prosper. This channel focuses on building or changing financial trajectories and building legacies. I almost got that wrong for a second in my brain. It's been a long week. I've been working a lot. I've still been active on the channel. I've been uploading the video probably once a day, once a day or every other day, something like that. So I have been active. Be sure to go check those recent interviews that I've released. I have a couple releasing tomorrow, and one releasing tomorrow, and one releasing on Sunday. So be sure to go check those out. I recently had CEO of Power Metal Resources, which was Sean Wade. I released that yesterday. Be sure to check that out. They're an awesome company that's focusing on natural resource investing, mostly in our natural resource exploration, and mostly focus on metals such as lithium and tungsten and gold and uranium. So they're on almost all of them, right? So well, not almost all of them, but they have a lot of them that they focus on. So be sure to check that interview out, and then also the interview with Adrian Day. So let's go ahead and get into it. All right. So Yahoo Finance put out an article recently about the banking sector. So I kind of bookmarked it because I got the notification on my phone, and I wanted to dive a little more into it with you all. So this is my first time reading the article with you all. I kind of breezed over it, but I didn't get a real detailed analysis of it before talking with you all about this today. So we're going to get into it fresh, right? So if you're watching, be sure to drop a comment, drop a like, something of that nature. Show your boy some love. People been saying that I'm putting out high quality content and they loving the content and everything, but I need to see these subscribers grow, right? I need to see them grow. I got multiple interviews coming up. Wednesday, I had 3 interviews. I had an interview with Rick Rule, Natalie Brunel, and as well as Todd Bubba Horwitz. So those are coming out soon. I got some interviews coming up with Andy Shepman and my guy Irv. So be sure to stay tuned for that. All right, so we're gonna go ahead and jump into this article now. Share screen. Boom. All right. Bank stocks tumble for worst month since SVB sparked crisis. So this is Silicon Valley Bank. It's been more than 5 months since the Silicon Valley Bank failed, but you wouldn't know it from looking at bank stocks, which the bank stocks did kind of have a little rally back, right? The KBW Bank Index fell 8.8% in August, sending the sector to its worst month since the spring chaos. The gauge is back where it was in March, when fear gripped the group after a sudden collapse of SVB and Signature Bank. There was a lot of politics around Signature Bank. And some people said that there was some shady stuff going around because they were investing in crypto. I haven't looked into that, but just wanted to let you know that, right? Investors have been reticent about piling back into an industry that's facing increasing regulation and deposit costs, as well as a potential weakening in credit, particularly for office real estate. August also brought fresh worries as credit agencies downgraded a swath of lenders, and expectations around the Federal Reserve's rate path became increasingly uncertain. All right, so what they're saying here is that people aren't really piling back into the bank stocks because of the risks that happened earlier in March when we had two banks go under and then one get, I think First Republic got acquired or something like that. And they're saying that there's increasing regulations. So there's increasing regulations on making them more sufficient and stable, right? So there's always regulations whenever you have these collapses. And then deposit costs. So deposit costs are cost that of interest that they have to pay depositors. So like if you bank at a big bank, then you're likely not getting anything on your deposit on your hey, what's up, JT Coin Rings? Hey man, appreciate you for showing love. Appreciate you, man. So the big banks aren't paying you anything on your deposits, but the smaller regional banks, they have to be competitive with the big banks. And so they have deposit costs. So pretty much when you're depositing money, they're paying interest. So they have costs, right? As well as potential weakening in credit, right? This is the credit crunch that I've talked about with many people, particularly for office real estate. So office real estate, I mean, people aren't back 100% in their buildings. I mean, you're lucky if you got 50%. A lot of people are working hybrid. Some people are working full time from home. So there's a lot of buildings that are empty, pretty empty throughout the week. And so there's a lot of concern around commercial real estate, especially since rates are now higher. So, like many of these businesses that have to get loans or refinance loans on these huge, buildings that they aren't having very many people come into the office to work, and they have to refinance these loans at higher rates. So that's the issue there, and a lot of fear has been sparked around that. Um, Oh yeah, my bad, man. I was in my JT trying to keep me on track, y'all. Gotta keep highlighting him. so so the banks, that's pretty much what's going on there. And they're saying that the Federal Reserve's rate path became increasingly uncertain because when Jerome Powell came out of Jackson Hole, which is a symposium they go to every year with central bankers around the world, he came out and said that inflation is still too high. 2% is still the target, and that they can see some more rate hikes in the future. So, all right. So we're slowly getting clarity, but there are too many of these things that are going to take a while before, in the aggregate, investors are really comfortable. So investors aren't feeling comfortable. We need a little more certainty on the path of rates. We need a little more certainty on the path of the economy at large, right? So I almost said economy. That's what one of these rappers he said. It was so funny. But the economy at large. And so they don't know what the path is with rates. If rates are going to go higher, many people are saying that the Fed is probably likely done hiking rates, but we haven't gotten any certainty on that. And then what is going to happen to the economy? So he's saying like people are still uncertain on the future of the banking sector. Um, the banks also need to play their part, giving wary investors more guidance as they navigate the industry's woes. Ideally, we get better roadmaps at the individual company level as to how these banks intend to respond to some of these regulatory interventions. So it says no respite. Bank stocks have come under pressure this year after SVB and Signature Bank sparked fears over deposit flight, which means depositors were taking their money out of the banks at alarming rates. This happened in the Great Depression. when people did bank runs, right? They did bank runs and banks will fail because they didn't have the capital to keep functioning, because pretty much it operates on a um, fractional reserve lending standard. So pretty much what that means is that a bank can, if you put $100 in the bank has a limit to how much of that $100 they have to keep in the bank. So it may be like $10 and they can loan out the 90. It doesn't show on your account or anything, but that's how their books work. So that's what fractional reserve lending is. For those who don't know. All right. So earlier this month, Moody Investors Service lowered ratings on 10 lenders and said it may downgrade several major firms. 2 weeks later, S&P Global Ratings followed suit and lowered grades for a handful of banks. The reports were a reminder that it's going to be a long slog for the group. In late July, U.S. regulators unveiled long-awaited reforms tied to Basel III, which would push big banks to adhere to tighter capital rules. A separate plan proposed this week would require banks with as little as $100 billion in assets to issue enough long-term debt to cover capital losses in situations of severe stress. All right. So what they're saying is that banks have to issue corporate bonds. They have to issue bonds. So they have to, with as little as 100 billion in assets, they require banks with as little as 100 billion in assets to issue, right, to give out enough long-term debt. So that means that they sell the bonds, they pay back, at an interest rate, right, to cover capital losses in situations of severe distress. So they're saying that banks have to raise more capital. So that's one of the regulations that came out. So let's go ahead and go over to the credit rating. So we recently had S&P Global, which we recently had Fitch. So Fitch had downgraded the U.S. government and their debt, right? Gave us a AA plus, and then now you have S&P Global. They follow suit along as well as Moody's, and S&P Global downgraded 5 more banks. So let's see what those banks are. So they downgraded KeyCorp, Comerica Bank, UMB Financial, Associated Bank Corp, and Valley National Bank. So this is what they did. So they actually, I remember Key Bank. Yep, we got a lot of key banks up here where I live too. So they downgraded them. High interest rates and deposit outflows weigh on some regional banks. So banks have to borrow at higher rates. They have to pay depositors at higher rates, and depositors are also taking their money out of banks. So this is causing a lot of issues for the banking sector, right? And this is just saying like changes in the federal funds target rate. So as you can see, the Fed has raised rates really fast. I mean they raised it up to 5 points in in a short amount of time versus the other times they hiked rates. So there's some things to worry about in the banking system. Things to worry about, right? And yeah, so we got some things to look at. So now we're going to look at KBW, which is a bank index, the NASDAQ bank index. So this is the NASDAQ bank index. So for the month, they were down about 8%. So they went from $88 to $82. One point they were at 79. But if you look at year to date, it just fell off a cliff, right? I mean, it's $115 back in February, $109, and it just fell off the cliff when Silicon Valley Bank went under. So it's struggling to get back to where it was. So a lot of people still are not confident in the banking system ever since that. So it may take a little while for them to even get their feet under them or whatnot. So why is this happening? Right. So now we got to look at why is this happening. We got to look at some of the mechanics behind it. I'm not going to pretend like I know every single mechanic behind it, but I have a solid idea or solid, uh, it's the truth, but I have a solid point of part of most of the reason why it's happened. Right. So most of it is because Silicon Valley had a lot of, I would say, bad debt, um, and depositors saw that, and depositors started taking money out, which pretty much caused a liquidity shock for the bank because people were taking their money out at in massive, rapid rates, right? And so the bank didn't have the liquidity or the capital, it needed, during that certain time. So we're going to look at what were the banks buying? Why didn't the bank have that liquidity? So that's what we're going to look at now. So this is just a 10-year treasury note, right? As you can see, 10-year was paying quite a bit in the 80s. This is when Paul Volcker was in there. And you could invest your money for 10 years and get paid, close to 15%, 16% on your money. So that's when rates were really high, even in the 1970s, you get 7%, so you had these spikes of the 10-year yield. So as you can see, we've been in a declining interest rate environment for decades. And this is what Rick Rules talked about, because there's been a huge rally in markets ever since the interest rates have been coming down, and now we're back in the uptick. So the banks, let's say, COVID 2020, the Fed took rates to 0%, and the 10-year yield was paying 0.64%. So many banks had a lot of capital then, right? Everyone's getting bailed out, stimulus checks, everything. M2 money supply was at a record high, so then they were buying all this debt back here. When rates were this low, they were buying all this debt at less than 1%. So they were getting less than 1% on their money, for these long-term instruments, right? So then you have the Fed come and raise rates dramatically, right? So when they raise rates dramatically, now, banks that buy the 10-year are able to get a 4.25% on that. So whenever you have these bonds here, treasuries and bonds here, you have to sell these at a discount. You got to sell these at a loss, because no one is going to come buy these for any type of premium or anything like that at point zero, 0.66%. So no one's going to buy that, right? It's hard to buy that. So now, rates are, 4.25% if you're looking at the 10-year note. So, yeah, so, when they had to liquidate and try to get cash, they had to sell these at a loss, so that's the reason why the banks were really struggling, and some of them went under. I mean, and here, as we can see, this is just like the 10-year chart almost. Just as you can see, like the federal funds rate and the amount of interest you're getting on that, right? So as you can see here, boom, the Fed just started raising rates. It was at, the federal funds rate was at 0%, so you're investing your money 30 years, right? Say you buy a 30-year bond, you put, you put a few thousand in, right? You're buying that bond at 0 point whatever percent, right? I think I have to go back to the 10 years. So if you bought a note, you're buying it at 0.66%. You're like, okay, yeah, I'm going to hold my money with the government for 10 years and get paid 0.66% back. That's horrible, right? That doesn't even keep up with the inflation rate. So, that's the issue there. So now, the Fed started raising rates, and they raised it up, very dramatically. It's at 5.33 right now. So banks bought down here, couldn't sell at a premium or anything. They couldn't do anything with those bonds. The Fed raised rates super high, and the banks lack liquidity. So because of that, So that's kind of like some of the mechanics of what was going on there. Um, I hope that was helpful. Now, if the banks are a buy, and I mean, I don't think the banking system's going anywhere, right? I do think that um, you do need to buy when there's fear, and so you got to be greedy when others are fearful and stuff. But I wouldn't just go in buying any bank, right? Um, so I'm not really touching it. So that's kind of my perspective on it. What's your perspective, JT? You touching the bank stocks? See if JT's still there. She was tapping in with me on Facebook as well. Anybody tapping in on Facebook? Boom. Let's see. Let's see. All right. So, all right, I got to share on Facebook. Somebody shared it. Oh yeah, my guy Pat keeps sharing my videos. Appreciate you, man. Yeah. So JT ain't touching them, y'all. He said he's not touching these stocks. Hey, that's probably a wise choice, man. It's a wise choice. Yeah, I'm not touching them either. Really, for me, only thing I'm investing in right now is I'm holding cash. I have some. Um, he said hardly have any money that goes in there except my direct deposit. Hey, man, I understand it completely. You gotta take care of priorities. Uh, so yeah, so the only thing I'm holding right now is cash, T bills. So T bills are less than a year, right? So those are paying, 5.5%, close to 6%. And then I am investing in natural resource companies. So I'm just like even more bullish on natural resources. I'm just like, I dove into the matrix, y'all, and I'm still in the matrix, and I'm just going deeper into it. And it's just it's just inevitable. Like, any country to hit their climate goals, their carbon emission free goals by 2050, most of them just throughout 2050, there's going to have to be massive amounts of investment into the natural resource sector. I mean, you can't just create green energy out of thin air, right? You have to mine stuff, you have to produce stuff, you have to find it, you got to test soil, you got to find the rocks, you got to find the lithium, the cobalt, the nickel, the natural gas, all this stuff to power everything that they're wanting to do. Like, so I'm just like very, very, very bullish on it. And then you got the military demand too, which we haven't got to that point, right? And you got these supply chain issues with, you know, uh, the BRICS nations and all this stuff, and then trade is looking kind of wonky right now, and globalization is looking like it's at risk, and so countries aren't as friendly with each other with trade, and now you got the U.S. government coming out creating laws to try to focus on our energy security and everything. And so, because we shipped off a lot of it, I mean, we import a lot of our uranium and all these other things when we have the natural resources here. So I'm just like fully convicted on natural resources. Like, you need them, you need them, you need them. The computers and the phones that you all are watching right now require natural resources and energy, right? I mean, to make a battery, right? The materials. Robert Friedland talked about people think that Google searching doesn't use energy. Like, no, it's on a server somewhere in someone's closet, right? And that's sucking up energy that's pretty much using power, right? So, energy is needed, it's necessary. Energy is life, right? So that's where my money is going. And but I'm not obviously not going all in right now, but I am investing in some companies, and I'm learning more about these company structures. I've been diving deep deep into exploration and learning about different ways these the mines work, the equipment work, all this stuff, right? And I mean, y'all see on my interview tomorrow with Rick Rule is coming out. I have the preview up now for a premiere. JT, I had sent it to you as one of my members, but I think I messed it up. So, but yeah, that's coming out tomorrow where we're talking about uranium stocks, and then we have another one the next day coming out about oil and gas stocks. So y'all stay tuned. It's a lot of information out here. We can really change our financial trajectories and build legacies. We can really break generational poverty, all these things. I'm just fully convicted. I'm here to allow you all to not allow you all, but I'm here to join you all and be alongside you all to be on this journey with me. That's what this is about. This is about community. This is about being on a journey together to financial freedom. Right. So obviously we can't just talk about this stuff. We got to put it into action. We got to think, act, and prosper. I mean, so see Floyd 89, I'm only buying gold, silver, and renewable energy companies. Hey, I feel you. That's good. That's a good investment. For me, I'm into all the commodities. I'm into, well, not all of them, but I'm into lithium, cobalt, nickel. I'm into uranium. I'm into natural gas. I do got oil stocks. Well, not a lot. I don't get a lot of oil stocks, but I got some. I got, I'm just all commodities right now, gold, silver, so, I mean, all this stuff is just like, all this stuff is just like ready to really just, take off. So I'm just so convicted about this. I'm so convicted about the space. And I think that we all can benefit together, if we, continue to think, act, and prosper. We can change legacies. Robert Friedland spoke at Rick Rule's conference. JT mentioned if I could have a quick clip. I can't really play the one from the channel, but let's see. I may be able to play a clip, but the one with Robert Friedland speaking, I can't really show that one. That one's like behind a paywall, and I have no way to access. I don't know how to access it from a computer or anything. But he talks about, these are stocks. These natural resources are stocks that you want to give to your grandchildren. So the unloved stocks are going to have their day, and I think that day is this decade. So if you are looking for a long-term investment plan, strategies, things of that nature, natural resources is the way to go. And that's just hands down the stuff that we need to function, the stuff that I need to see right now, right? The materials that go into my glasses, right? The materials that goes into the microphone, like, hey, that stuff is necessary, right? So no, create quick clips from your upcoming interviews to share on live streams. Yeah, that's a good idea. I didn't think about it before this one, but I will definitely consider that in the future because, yeah, I sure do want to keep promoting it. I have the next one coming up. It's coming out in about 7 hours. That's a premiere right now. I said as a premiere, but yeah, it'll be out in about 7 hours. And we're talking, going deep into uranium stocks, and then the one coming out Sunday, we're talking about oil and gas stocks. And so, yeah, it's good. I got my guy Benjamin with me on the interview. Benjamin is from the ROI podcast / channel. Good dude from Australia. He's been joining me. He joined me on the stock analysis, and so he joined me on the interview with Rick. So we were both able to piggyback and ask Rick some really good questions. And Yeah, Rick's the guy. I mean, y'all, he's the guy. I'm still like, I didn't even know like how important this man is, right? Just into this space, right? Rick and his buddies write checks. They write checks to keep explorers and mining companies alive during times where it's financial turmoil. So just think about that, right? I mean, it makes me think about when Lehman Brothers was going under in 2008, and they went to Warren Buffett. They tried to get Warren Buffett to bail out Lehman Brothers, right? And nope, or Buffett said nope. So like Rick and his buddies are guys that write those checks to keep these companies alive. So keep them afloat. So that's that was like a mind blower for me. And you'll hear that in the interview. I'm not just sharing like, information that I shouldn't be sharing, but you'll hear that in the interview coming up. And so, and I was just like, oh wow, like this is like, that's like a big deal. That's like a big deal. That's a lot of capital. So yeah, and I think he mentioned like him and his buddies, they have a pool of billions of dollars. I don't know if it's 30 billion or something like that, but yeah. So yeah, the stuff's real. We learn it from some of the best people on this channel, some of the best in the space. We're hearing from CEOs of companies on stock exchanges, right? Yesterday, I just did the interview with Sean Wade, CEO of Power Metal Resources. They focus on tungsten, gold, silver, copper, lithium, graphite, nickel. They have all these different exploration properties that they are focused on, and so and they raise capital. What's up, GoFlow? My guy, how you doing? Good to see you. So he was on the CEO of a company. It's on a London Stock Exchange. So you do have to watch the video for if you don't know how to buy stocks on the London Stock Exchange. You do have to watch the video on I did on Interactive Brokers, where you can set up an account, deposit your money, transfer your money convert your money into the currency of the stock that you're trying to buy. So for example, when I buy Power Metal Resources, I have to convert the money into British pound, and then when I convert it into the GBP, then I will be able to buy the stocks on the London Stock Exchange. So getting access to these companies that are not on the U.S. Stock Exchange is like, I think it's just very just critical for you to grow wealth. I mean, because like if everyone's looking at one company, you can find that one that's like undervalued, should be valued, and then get some massive gains from that one. I mean, because people are piling into like a lot of the other ones. So yeah, look at companies outside of the US. I mean, you could buy on the Toronto Stock Exchange. There's a lot of companies there. I'm learning about companies. I mean, the video tomorrow is going to talk about some companies that I've never even heard of. And I looked them up, paying 25% dividends, things like that. So like, we're expanding our financial knowledge, and there's levels to it. And so you're going to see tomorrow in the conversation when the interview drops, you're going to see the levels to like this. And so like, that's why I made this channel, the Money Levels Show, because like there's levels to it. And I'm not going to claim like I understand everything. Yes, go flow. You got to add true diversity. You got to be diverse, and so I'm doing cash, natural resources, and I told y'all that I am doing some a little bit of crypto, not a whole lot. I'm not putting life-changing amounts of money in there, but I am speculating, so if we do have a boom in the Bitcoin the next halving cycle for Bitcoin, just believe I'm going to partake, and I'm going to be buying gold ounces if that happens. So I'm not going all in. I'm not, no, I refuse to, but I will speculate, and everything, and cash out on someone else's, sell it to someone at a higher price, that's willing to buy it at a higher price, right? So, yep. So diversity. I'm doing cash, still stacking metals. I took a little break on metals. I'm actually diversifying my metals now. There's different ways you could do that. You can buy the Sprott trust, the gold trust or the silver trust, the ETF. Um, I had an interview with John Barker from Sprott. It's on my channel, and then it's yeah. So John Barker talks about the benefits of buying the Sprott ETF, and I mean, pretty much, I mean, you get you can get a tax break, buying it and getting the long-term capital gains rate versus like selling actual physical metals. You don't necessarily have to have huge amounts of physical metals in your physical possession, so that's a good reason to buy the Sprott ETF. But there's also apps such as like One Gold, which is partnered with AppMex, and then also when Battle Bank comes out, you can buy bullion through them, and then they can store it in vaults for you as well. So I'm trying to diversify even like my gold holdings, right? So like I have some at home, right? And then I'm diversifying into stocks as well as different vaults. And so obviously, if you don't, it's like the saying, like if you don't hold it, you don't own it, which they mostly refer that to stocks. But I think that you can get you get in, most of your stuff is insured through vaults and stuff, but you have to like verify the vault and everything. So we do got a question from one of our members, well, not members, but one of our viewers right now. Eddie, is now a good time to buy stocks in US now? Depends on what sector you're looking at, right? Depends on what sector. And what I mean by that is we're gonna look at it right now. We're gonna look at it right now. Let's go. So, for example, if you're buying tech, let's say you're buying tech, right? US stocks. Let's say you jumped into Nvidia, right? Nvidia is at a year high, so I would not be touching Nvidia. Nvidia is at an all-time high, I believe. All-time high. I am not touching that stock. Right? I am not touching that stock and getting wiped out or any. Nah, I refuse to. Yep. So that's a risk right there. Same thing with some of these other companies. I mean, even Meta, like even the way they bounce back, like it's just insane, right? I mean, I bought Meta down here, and I should have kept that joint, but yeah, I was thinking the market was going to go lower. But yeah, Meta almost at back to its highs, so I wouldn't touch them. Companies that I would touch, obviously are companies that make things. I'm into the resource sector. So, for example, you have let's see, what am I looking up right now? Okay, these are some big names. Cameco. You obviously got Cameco. Cameco's been running, but it's still low. Compared to, it's not at its old highs in 2007, and we're currently in the uranium bull market. This is just a big, a bigger cap stock. I mean, many of the other smaller ones. I mean, uranium's just been running just in general. But you can look at like Next Gen, right? So Next Gen's been doing this thing. I mean, you could argue that these are at the high, but this company doesn't even go back to the '07 highs or whatnot. You have to look at a company like, let's see if they got Paladin on here. Paladin Energy. Let's see if they show it back there. I doubt they even show the freaking. Yep. So Paladin Energy, the last uranium bull market, it actually hit $10, but maybe it closed at 7 or something. But $7 right now, it's at 50 cents. So I mean, many of these companies are still off their highs for them being commodities. Gold miners are very much off their highs. So if you look at Newmont, this is one I've been buying. Newmont at 39.32. Its high was 73. It's still down 50%, and we're not even in the right now. The gold stocks have not been in a necessarily a bull market. The metal has. I mean, you got gold. No, this isn't. I'm looking for the actual company. Barrick Gold. There we go. I mean, Barrick Gold's at $16. I mean, it's off the highs, 2011 at $50, right? So I'm buying stuff that's cheap. Now I'm not touching AI software has been the fire topic. Yes, agreed. It has been, and it reminds me of freaking 2000. I mean, just not. I don't remember what was going on in 2000. I was young, but just from reading about it, that's what that reminds me of. So Eddie, I'm buying companies that are like very cheap. I mean, like even 3M. I mean, they're off their highs. I mean, 3M was at $235, at $106 right now. So that's a company. I mean, there's other ones. I mean, Verizon, right? 6% dividend. It's at $34. Verizon was just at $60, almost 50% off its highs, a little less than 50% off its highs. So yeah, there's companies out there that are still very undervalued. So I'm not touching the ones that are close to their all-time highs. Like, I'm not touching them at all. So you said tech and software companies with the licensing subscription scheme. Yeah, many people are investing in that, and it's cool. Like, if you're doing it for the long term, obviously, if you believe tech is going to be what it is in the future, which I do believe that. But I mean, obviously, we have to go through these cycles. We have to go through these cleansing cycles. So, um, I mean, I've showed y'all this chart before, the growth to value ratio chart. I showed y'all this before, but I'm going to show it again for those who haven't seen it yet. Repetition. No, thank you. All right, so as you can see, when growth is this high, it shows it here, 2000.com bubble. That was my birthday, March 9th, 2000. That was the high. So as you see, this is when people are more into the growth stocks, which are growth stocks, or stocks that they price in the growth early. So they expect, like, okay, this company's going to do good. And when this company does good, it should be at this price. So then many people pile in, and then the stock grows faster than it actually reaches those milestones that people suspect for it. So growth stocks are like the Nvidias and such that move really fast, right? So value stocks are the companies that pay solid dividends. So like 3M would be a value stock, the one that's 50% off its highs, right? Gold miners would be value stocks. So as you can see here, when the bar is low, when the chart is low, that's when people are more invested in value stocks versus growth stocks. So they're more invested in value stocks rather than growth. And when the chart is up, people are invested in growth rather than value. So here you get to the .com bubble, pets.com, amazon.com, yahoo.com, microsoft.com, everything. And then the tech bubble just popped, just dramatically. People flocked to value stocks, And some of these could be emerging market stocks as well, emerging markets. So stocks in Brazil, China, things like that. And then, people kept staying in growth stocks, right? And then, you begin to see the growth stocks begin to grow after the global financial crisis. Kept growing, kept growing. Then obviously we had the pandemic and everything grew really high, and then it came down, but then the growth stocks would just pop back up. So I'm not buying growth stocks at this point. They could go higher, but at some point it's going to have to revert back to mean, and the value stocks are going to outperform. So, um, and even Rick told me, like, the value is in compounding. You have to compound your money. So if you're investing in dividend payers, value stocks that pay solid dividends and compound your money, then you'll do fairly well in the long term. So but some people want to get rich quick, right? And it's all good, like, if you have strategy, if you can, like, invest in a company, and you know how to trade it, and you know how to take your profits and all of that, that's by all means do it. But like, compounding is ultimately the way to go. I mean, this is a important quote here that we're going to look at. Boom. I think I'm here already. Am I here? Yeah, I'm already here. Yeah, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So that's Albert Einstein said that. So we have to compound our money over and over and over, right, and allow it to grow. Do you expect inflation to stay till mid 2024? Eddie, I believe that inflation is going to stay for a while. Um, and I say that because there has been lack of investment into energy and infrastructure. I mean, especially in, like, the US, a lot of the Western nations in general, right? I mean, think about it. Like, our power grids are outdated, like, our roads are outdated, right? Our subways are slow, very, very slow, especially compared to, like, China and other nations, right? I think China's average subway moves at like 100, I think it's like 200 miles an hour. The subway in New York moves at freaking 50 miles an hour, So, like, we got to invest in our infrastructure. We got to invest in our nation, in to be built up even better. And so that means that yeah, yeah, and Go Flow is from New York, right? From New York. I don't know if you're from there, but I know you're out there, right? East Coast, because we were talking about that with hip hop, So yeah, like, we got to invest in, like, we need these commodities to go. So otherwise, so right now, it's supply and demand. So many of these commodities are still elevated and underinvested in, right? Because we haven't brought any supply, and we haven't brought any supply on. I mean, let's look at crude, right? Let's go look at crude. Some people don't like oil, but it's an earth resource, and I know that we're trying to fight climate change and all of that, but it's still necessary right now. So crude's going up, right? Because we haven't invested in supply. I mean, and then on top of that, I mean, if we want big oil to invest back into more production and stuff, like, you can't have, politicians and people, criticizing them. That was the issue with Biden, was like, hey, like, you're clowning, you're getting on us for making these record profits, but they're like, we're not finna invest back in to put more production online if you're threatening to shut us down in like 10 years. Like, what kind of fool will do that? And so we have to bring more supply online, for inflation to go down. Hey, what's going on, Max? Good to see you. Good to see you. Good to see you. Well, I don't see you, but good to see your comment. Appreciate you. So Eddie, I think inflation will still be here. And another thing is that, the Fed does not control supply. They can affect demand, right? So if they raise interest rates high enough for unemployment to rise dramatically, right? People lose their jobs. People aren't driving. People aren't, flying, traveling, things of that nature. Like then, the price of oil usually goes down, right? Every time because it's demand and supply, right? But in the particular case we're in right now is supply. So we have a supply issue. So that's the issue we're in right now. So if we're not investing in bringing more supply online, then it's just basic, supply and demand fundamentals. I mean, so um, yeah. I mean, and the whole thing with even with crude oil, and everything, like some people get so upset about it, but it's like this fuels this resource fuels everything. Like I understand, like people are upset about climate change and things like that, but it's a resource. It's apolitical. Right? It should be apolitical because it's a resource, right? It's a resource that's naturally within the earth, right? Um, but I mean, we want our food. We want our grocery stores stocked, with food, right? And toilet paper, like in COVID, right? You know what I'm saying? And those trucks are not running on electricity, right? They're running on diesel fuel. We want to travel, go see our family in other states, go out of the country, things like that. Those planes are not electric, right? We want our Amazon packages on our front door, UPS overnight to us. Those planes are not electric, so um, I just think that, in order for the narrative has to change, so like I've shared this before too, which we're gonna look at again. I wish I could find that other website, but we'll just look at this for now. So the narrative has to change. So my bad, Eddie, you got me going in right now. It is what it is, huh? The narrative has to change, right? Let's look at the holdings of the S&P 500. I showed a website with the historical data before about the holdings in the S&P. Right now, basic materials, 2%. What else is in here? Energy, 4%. So the big investors like the hedge funds and the retirement funds and stuff, they're not, like they're not getting behind energy and basic materials right now. So that's what that shows me. They're still on tech, right? Tech is at 28, 29%. Healthcare's up, right? Consumer defense stocks. I mean, I think that's defense stocks, maybe. Financial services and cyclical. So, I mean, energy getting no love. Basic materials that we need to build stuff are getting no love. So that's why I'm not touching these sectors because there's a lot of money invested in there. I'm a contrarian investor. I invest the opposite of them. I mean, I'll follow the trend up, but at some point, everyone's going to run to my side of the boat and I'm going to be selling these shares at a higher price. It's just a historical cycle, right? And yeah, but like yeah, we haven't invested in energy enough to bring more supply online. I mean, Biden was releasing from the SPR, right? Um, he's releasing from the SPR instead of bringing on more production. Um, and like he's like releasing, oil from there, selling it to reduce gas prices instead of like building or drilling more holes or giving more licenses to companies to produce more. Like, so why are we releasing from the SPR instead of producing our own stuff? Like when this energy transition is going to take a long time. So it just makes no sense. So I think inflation is going to stay elevated. Um, and I think as soon as the Fed pivots and tries to, start printing money again, inflation is going to get worse. That's my take on it. See, my guy, Max, I remember when the statistics showed animal agriculture was the biggest contributor to carbon emissions. I'm referring to these statistics being posted in 2017. Now the statistics are written to show that transportation and logistics powered by petroleum is the biggest emitter. Yeah, that's a good. Makes no sense. Climate change is an emotional contrived argument to it. I do think you were handling your discussion with professionalism and indifference, though, Daryl. Keep up the great work. Appreciate you, brother. Appreciate that. Yeah, I mean, I honestly don't get into like the back and forth with it. You know what I'm saying? Because like, regardless if it's true or not, right? Or data's being skewed or whatever, whether it's political, there's a lot of political components to it. Me being a big uranium bull, I'm just like, either way, it's clean and it serves as a good base load power. So we're gonna need it. At the same time, like, there's a humanitarian case for carbon hydrocarbons, right? I mean, you got 770 million people in the world without any electricity. That's an estimate, right? And then you got billions of people with not as efficient electricity. Like they can't have the lights on like I got right now, or their webcam on like mine and stuff. Like, so there's a big humanitarian case for hydrocarbons. I mean, because it's like, okay, we enjoyed the benefits of it, and then now when other people are trying to come online and have the same type of lifestyle that we're trying to have, then we cut the cord, right? You know what I'm saying? Like that does not sound fair at all. Yeah, I just think that the argument, I don't say it's like untrue, because I do see like some people that are like pro natural resources that really make good cases for it. And so, but I just think that you can't just go cold turkey, right, without a plan, right? You fail to plan, you plan to fail. And so now you have all these countries with carbon emission goals 2050, and many of these big miners are saying like, where are you going to get the resources from? Like, we are not even ready for that. Where the checks at? Like, so it's like, yeah, it just doesn't, it's backwards. Going on, my sister tapping in. Demia, what's happening? We talking energy and commodities right now. I'm bullish. They going higher, sis. They going higher. This is my blood sister, y'all. She's the second oldest, so it's my blood sister right here. Appreciate your support, sis. So yeah, so I mean, yeah, right now we got, y'all see the video of Mitch McConnell? It's sad, but like, man, yeah, I ain't seen that yet. We about to watch that. Cause that was sad, That was sad. Look, we about to look at this real quick. Yeah, for real, for real. Uh yeah, we about to look at this. Mitch McConnell. This was sad, y'all.
We're about to go into a recession, and so could your business or job. But do you want to know what will never?
Okay.
Senator, you're up for election in 3 short years. What are your thoughts on that?
I'm sorry, I had a hard time hearing you.
That's okay. What are your thoughts on running for re-election in 2026?
What are my thoughts about what?
Running for re-election in 2026.
That's
Did you hear the question, Senator? Running for re-election in 2026? All right, I'm sorry, you all. We're going to need a minute. Senator Benny.
Okay.
Somebody.
Hey y'all, that's sad, yo. That was sad, man. I'm trying not to yeah, that was sad, yo. I posted this chart on my channel, y'all. Be sure to go subscribe if you haven't subscribed yet. This is from Jim Bianco. Got it from him on Twitter. But yeah, this is a chart. The average age of Congress, Jim Bianco. So obviously in the 1790s, people were in their 40s. And at the Senate, continues to go up. I mean, during this time, I mean, from 1903 to 1967, I mean, they were up there, high 50s, right? During that time, we went through 2 world wars and the Great Depression and a banking collapse. So I expect, the older generation to kick up then. Then it came back down in the 80s to, low 50s. Now it's at 64.56 years old. That's the average age of the Senate. Yeah, go flow. That's true. My sister said dementia for sure, but he's up there running America. Yeah, this is like a serious issue, like, I mean, Nancy Pelosi, she up there. I mean, she is up there, for real. Got Max said that's a dangerously long pause. Yeah, yes, that was sad. At first, I thought when they said it, you considering running up for election, I thought he was just traumatized. Like I don't want to lead this what show of America, And I was like, dang, he was traumatized by that question. But then I started looking at it again, and I was just like, man, yeah, this ain't normal. So yep. Why is it not on every news site? Seen the average age of Congress post earlier today. Yeah, so that's just insane. We need some young people to go up there, and don't ask me to. That's probably the mentality of every millennial right now. It's like, hey, don't ask me. JT, I look the same way when I'm trying to remember my computer passwords at work. Hey, I understand that. There was a meme out, man, about Mitch McConnell with that, and it was about the like Olive Garden when they grating the cheese, and they grating the cheese. They say, "Tell me when to stop," right? And they had the freaking Mitch McConnell there just sitting there froze, like that person was going to keep grating the cheese forever because he was just froze. And I was just like, oh, that's jacked up, y'all. We can't be making fun of people's health like that, man. But real talk though, you got to pass the torch. You got to know when to hang it up, right? We got a lot of people in the nation. You got to know when to hang it up, when to pass it on. That's real talk. He said that's cold. Yeah, man, it was cold, man. That was. So yeah, Nancy, Nancy Pelosi, she been up there. Let's see how long she been in office. Let's see how long Nancy Pelosi been in office. Dang, she was born in 1940. All right, here we go. PelosiHouse.gov. We about to look at this right now, y'all. Y'all done got me sidetracked. Y'all done got me sidetracked with this, y'all. Nancy Pelosi has represented San Francisco in Congress for more than 36 years. She served as the 52nd Speaker of the House of Representatives, having made history in 2007 when she was elected the first woman to serve as Speaker of the House. Hey, congrats to her. But yeah, she's been there 36 years. 36 years, yo. She was born in 1940. I'm not trying to be ageist or nothing, but yeah, like at some point, at what point? So hold up. She's born in 1940. She was 60, so she 83 years old. She's 83. At what point do we pass the torch? That's the question. At what point do we pass the torch? Yeah, I'm 35. You know what I'm saying? Like he said, she's she is. She is, yo. She's been getting so many good trades, right? I need to learn from her. I need to get that insider knowledge she got. She been making money. Yeah, she been making money. So I need to follow her. That's what I need to do. I need to follow her tips. She got a lot of tips there. Yep, exactly, sis. It's not about his health. It's that he's allowed to sit there and make decisions. Yep, that's real. Dang, JT said that was wrong. Hey, y'all need to stop, man. Y'all gonna get me banned or something, man. Shoot. All the elders in Congress retire and leave it to the hands of AOC. Yeah, I mean, AOC, you gotta have emotional intelligence in that type of field, and I fear when people don't have I wouldn't say I fear, but I'm very concerned when people don't have the uh, self-control, to be mindful of what they're speaking. Because I've heard her say some stuff, some off the wall stuff. Like I'm sure we've all have. She said some off the wall stuff that just like, did you even think before you spoke right there? You know what I'm saying? And or did you check your sources or the information that you put out there? Did you check your facts before you made that comment? And so that's I'm concerned for when people like that are in leadership, right? Um, because you got to be able to. You got to work together with the other side, right? The Senate's, almost split down the middle, right? You got to be able to work with the other side. So you got to have people that are very emotionally intelligent, mature, and can debate, obviously make debates and stuff, you know what I'm saying? And live within reason, right? And so and live with trade-offs. Like Thomas Sowell said it, he said there's no solutions, there's only trade-offs. There's no solutions, there are only trade-offs. So we have to assess, okay, we think that this is a solution to this problem, but what are we trading off when we make this decision? So you got to have people that are able to assess trade-offs and make the best decision that they can, while they're in there, because nothing's going to be perfect, right? And you have to assess the unintended consequences and anticipate that as well. So yeah, it's really true. Sister agreed. That part, emotional intelligence, we live in a different time. Let these younger people in with new ideas and solutions. Yep, agreed. I think that new ideas and solutions are good. We obviously need to look at history, because history does give us like information, in terms of like, okay, what happened, like mostly, I mean, there's hardly any new ideas, right? I mean, like the situation with the debt, that's just out of control, right? I mean, like I don't think that's going anywhere else. Like we got to figure out. I don't think the government's going to balance the budget, right? We're spending about 200 trillion. I mean, not 200 trillion. That would be a lot, but 2 trillion over budget every year. So I don't think they're going to balance it, So it's almost like we got to look at history and stuff. And so my guy Neophyte said, "Let me ask, how popular was politics in your high school senior class? Very few people born in the 80s, let alone after the 90s, are trying to get into politics." Yeah, I honestly did not believe in politics. Like I felt like political figures were selected, not elected. You know, and I just did not. I did not. You know, like the first time I voted was for Obama in '08, and I voted because he was black. That was just, to be honest. Like, oh, I've never seen this before. Black man running for presidency. Let me vote for him. I did not vote for him the second term, but I did vote for him the first term. Second term, I started getting some information and I was like, okay, but I mean, he was more emotionally intelligent than the other people I've seen in office. I would say, even though like we seen like a shift in politics. I mean, especially since like Trump was elected and stuff, like it was like a shift, a big shift. Um in I think Trump was very, bold in things he said, and like he put his foot in his mouth quite a few times. Obviously people were attacking him and stuff, but I think he said a lot of stuff that people just didn't want to say. I just think he was that person, that unorthodox person that would just say whatever people didn't want to say. But he got his interests too, so that he looking out for. That's why these cats are past 80 years old and still working. Retirement is at age 65. AOC is 33, bro. I couldn't do my taxes right at 33. Yep. It's about managing the debt now. Forget paying anything off. Yep, that's true. Truth. My guy JT said I was honest. Hey, I was. I was 18. No, I was 20 years old when Obama went for president. And the yes we can, like the energy at that time, like I was like, yes, we can, right? And I freaking cast my ballot, bro. I was like, yes, we can, So I mean, I think I think some pros and cons with that for sure. The trades were trending in 2000s. Now you get the majority of people hating on post-secondary education because of all that debt. Yes, I mean, people that I got friends of mine that make more money than me, being electricians and things like that. Like, yeah, so the trades are where it's at. I mean, now that I got my master's degree, I increased my income, quite a bit, because my skill set is more of the intellectual, leadership mindset. So, helping people in that way, consulting, things like that. But people that work really hard with their hands, they getting money, and they coming out debt free. They ain't got that much debt, and stuff. So it was definitely a good move for my peeps that chose the trades. For me, I'm still trying to figure it out. I'm waiting on these natural resources to pay off. You know what I mean? What's up, my guy Marius? Good to see you. Good to see you. Go Flow. We were in the days back in the day. Yes, we was for real, for real. I was gonna show y'all something I was just looking at. All right, let me find it real quick. I was gonna show y'all. It was about the budget. It was about the budget. Let me find it real quick. And yeah, I know what it is. I know what it is. Let me type this in real quick. It was a recent article. All right. It's a recent article. This is okay. This ain't the one I saw earlier, but it's from August 10th. It ain't too bad. So this is, it gets the point across. My guy said he's an electrician. He's still in debt, bro. You got to come to Washington State or something, man. You know, I mean, the cost of living is higher, but you get paid a lot more money. It was kind of interesting. I met one of our new staff at the school district I work at. I'm a director for a school district, and our new staff, she works at the front desk, and she came from Tennessee, and she was a teacher down there. And she was like, yeah, I make the same amount of money working at the front desk as I was as a teacher in Tennessee. He said, I paid for Trump University. I'm still trying to learn about real estate. At least I learned about gold from Mike Maloney. Hey, I'll tell y'all right now, I got this game downstairs. It's called Trump. And this game like is really intense. Like it's like a real estate game where you gotta, jump the boards and you gotta bid on these properties. You got these properties and you gotta bid on them and stuff. And they got the certain amount of money in there, like the equity in them. That game is fire. I'll tell you right now, I was playing that with my friends. We used to smoke cigars and freaking play Trump. Yep. We used to play Trump on the freaking board game. And this was when Obama was in office. This was like what, 2012, 13? And sure enough, he gets elected as president. You know what I'm saying? I still play that game. That game go hard. I ain't gonna lie. That game go hard. So that Trump board game, look for it if you ain't played it yet. It's a good competitive game. And it's funny. It's funny when you play with people that don't like Trump. Like I play with my mom's and I don't think she liked it, but she whooped us in that game though. She whooped us. All right, so this is what I was looking at. So there's an article that came out about the 2024 increase. So increased cost of living adjustment increase. Social Security cost of living adjustment was 8.7% for 2023, the largest since 1981. So as you can see, this means more money is going to get paid out. That means the government is going to be in more debt, right? Because of these entitlements. No one's going to adjust it, right? No one wouldn't dare touch this with a 10-foot pole because they are not going to get elected. I guarantee you that right now, And this ain't against nobody that's on Social Security. I'm just saying the facts is that politicians are not going to look at their budget or cut this type of spending. I mean, unless we're in like a crisis or something, a war or something. But I mean, they're not going to cut this. They're going to keep this rolling out, and the debt's going to keep increasing. So I don't expect it to be there when I get up that age. That's why I'm focused on my own financial future. Cost of living adjustment for 2024, that's estimated to be around 3%. We will see, right? But yeah, the government's budget, I mean, the deficits are astronomical. So yeah, it is what it is, right? He said, wow, y'all really partying over there. The Trump board game, I heard it all. Hey, man, I'm telling you, if you get that game, man, that game go hard, man. Bro, next time we see each other, I might have that game with me or something. I might have to just buy it just so we can play it, so I can bid against you. Like, yeah, I need the hotel. Let me get the hotel. And then you can fire people. You're fired. you know, and then you can only get back in the game if you got the trump card with his face on it. Yeah, that game go hard, man. It says, but think about eras in the 80s, degrees were scarce, and that's why that push happened in the 2000s. Government backed the loans and exploded enrollment. Kind of interesting. Minorities hit records for peak enrollment in college, and it just so happens becomes the most expensive time in U.S. history to attend by design. So, I mean, the reality is, degrees were scarce in the 80s, but there was a big push for college back under I'm trying to think what administration. It was early on. It was like around the time we were space racing and all of that, a little bit before that. There was a big push for college then to really, like, you know, compete as a nation, like, you know, and stuff. And so, like, I think because we were in the space race stuff, we were like behind or something like that, and then there was like a big initiative to push for college then. So you know, there was maybe two waves of pushing for college, but yeah, like you know, definitely, you know, those consequences happen. Bring next time you come to Baltimore, will do. Right now the trades are pumping with the decrease of college degrees. Will be back in demand in the 2040s. Yeah, the trades are pumping, man. I think that you got to know how to build something, man. I mean, if we go, I mean, I just think about, like, I always ask myself this question. If we have a Great Depression, you know, like back when people was in bread lines and people did not have income, things of that nature, you know, what would I be able to offer people? Right? What would I be able to offer people? Back then, you had a lot more trade jobs. You had a lot more industrial jobs. So if you can go build a house, you could go be a handyman, whatever. You can make it work, right? And so I asked myself that, okay, what can I offer people, you know, if this was to happen? You know, so that's a good question, you know, to ask yourself, because people that can build stuff with their hands definitely are always going to be in demand, you know. Shows like Cosby Show pushed college enrollment for African Americans in the 2000s. Yep, that's true. I think it's also depends on what degree you go for. You know, like if we're not going for degrees in finance, degrees in banking, you know, I mean, degrees in politics, right? I mean, some people go for political science, but I mean, you got to think if we're going to degrees in to be counselors, you know what I'm saying? Like a lot of us are going for degrees in social work, right? And you already know, you go to degree for social work. I mean, you want to help people, right? I mean, you getting paid, you're not getting paid that much. So it depends on what degrees you're going for. I mean, obviously, if you're going for degrees in like things like African American studies, right? Um, you're not going to, there's not a big, huge demand for jobs with that, right? So, um, you know, I think that it just depends on what type of degrees we're going for too, or we went for, right? And so, I mean, my first degree was business administration. You know, just trying to pursue the entrepreneur route. That was my associates. Then I went for criminal justice. So my degrees in criminal justice and human services. That was when I was a probation officer. I don't know if y'all know this, but I was a juvenile probation officer. I was also a resident monitor at a halfway house where we had kids getting out of juvenile. They call it juvenile rehabilitation, but it's almost like a juvenile prison. They would come to this halfway house, right? The halfway house was with people getting out of the feds, right? So we got the adult side of it and we got the youth side of it. They're all in the same population and stuff. Like, I was seeing some crazy stuff up in there, you know, like, and so I always had to have my head on the swivel, all of that stuff. So like that's like, you know, those are the type of jobs I was working, right? Uh so so yeah, shout out to the people that work in, I mean, I know people that work in prisons. My neighbor, she works at the women's prison, you know, that's a little ways away, but yeah, that's a hard job, you know. Um Marius, I did not get a chance to watch that. It's on my watch list. I have a lot of competing interests right now. With school, I finished up my last two classes. School, work, fam, obviously, the channel, which that supports the channel. Understanding that, I got a bunch of books to read. Right, I still got to finish Nomi Prin's book. She's coming on the channel next month, this month. I got to finish her book. I bought The Fourth Turning Is Here, that book. Um, I'm trying to get. I'm gonna get Lynn Alden's new book. I'm gonna see her in New Orleans, get it autographed. Hopefully, we talked about an interview, so we'll see if she comes on. Um, and then, yeah, I mean, I got a lot of competing interests right now. So, and then I'm doing a rural classroom, and I got a bunch of emails. I got this how to value stocks. I got this course I got to take, how to value stocks. Um, so yeah, that's just a lot of little stuff going on. So I just have not got to that documentary yet. I just have not got to that documentary yet. And so yeah, yeah, but I'm gonna get to it though. Appreciate you for reminding me. Neophyte said STEM degrees. Yep. Social workers caseload wild. Yeah, man. I mean, be honest, that field is so hard. Like my mom's like she didn't bounce around probably like a good 4 jobs being in social work in the last however many years. I mean, yeah, probably more than that. So yeah, it's definitely social work. It's not, you know, and you know, sad because like historically, like I think what it was like, well, from what I've heard, like I have not researched this. This is just what I've been told from some elders, right? Is that usually social work jobs were viewed for as women, and so like that's why they were like underpaid. Um, and the trade jobs were viewed for more as men, you know, with gender roles in society, you know, years ago or whatever. So I don't know if it's true or not, but that may be the basis. But they're doing like some of the on the ground work, like with the hardest people in society. Like, man, I'm telling you, man, you get the hardest people in society, and I mean, having to deal with that. My wife, she just got a job, you know, doing some social work type stuff at a school, and the kids she had to work with, dude, man, I'm just like, man, hey, my guy JT went for biology, man, and I cannot pass that. My guy Neophyte said, damn, D a narc. Hey, it's crazy though, man. Like I'm gonna have to, you know, tell my story sometime. I want to do more of a story, you know, and man, I want to do more of my story. You know, I came from the other side of this. Like, you know, I was the one hopping the fences, man. Yeah, I was in actually I'm gonna show y'all this. You ain't even know this about me. It's so many layers to life, you know, to all of our lives, right? You know, and I just try to really you know, I'll let a little bit out at a time, but I'm gonna show y'all this. This is like this is where I come from. So me doing this stuff, finance, investing, all of that, this ain't even like the path, man. I mean, this wasn't the path I was on. So yeah, if it can click through at some point. Okay. Boom. Here we go. I'm gonna show y'all this right here. He said D a criminal. Hey man, I was out there, man. I was out there, man. You know, so this was in 2008. It's my music Instagram. If y'all ever want to follow, you can. But yeah, this was 2008, man. I was arrested. I had just got out of I had I was on the high, man, just with my music and everything. I just got out of like a big radio interview, all this stuff, and then I went to a dang party and showed my butt and got arrested, man. So charge one was carrying weapons. This was actually me. I had got caught with 2 guns on me. Then I got charged with a felony for possession of firearm with altered ID during committing of a felony because I had went to the middle of a apartment complex and shot in the air when this fight broke out at this party, and I ended up getting caught with 2 guns on me. So that was I've come a long way, man. A long way. You know, many people don't know that about me. So yeah, so I've been on both sides, you know. I've been on the freaking the criminal justice side, you know, working with people in the system, and then also been on the other side, you know. He said felony stacking with your boy Daryl. Hey, it's crazy because you get quite a few people. Like I like listening to the Wall Street Trapper. I mean, I think he was in prison too for a while, and he came out, you know, trading stocks and stuff. Like, it's just like channeling your energy in a different way. If you're like, you know, was in the streets and stuff, and like a lot of people in the streets, they want to be entrepreneurs, right? That's how I view it. Some people seek the thrill for like, we said my guy was just a party chaperone, man. Hey man, I was what 20 years old, man. And man, I was, you know, at this party and I had went to the car for a second and it was with some close friends of mine at that time. And we're in like a 2-bedroom apartment. And it's probably like 20 people, something like that, 20, maybe 25 people. And I came back, went to the car, came back. It's a huge brawl in the freaking 2-bedroom apartment. Stuff getting broken, everything. And, you know, pulled my gun out, shot in the middle of the complex. Pow! Everybody stopped, looked at me. Like, it was crazy. It was almost like I just hit the pause button on life. You know what I'm saying? Like, pause. You know, like everybody looked at me, they heard the gun went off, and they just like, and I just said like pause, and they just stopped. And then they all went back to arguing again. It was crazy, man. I was like, yeah, my mom's didn't raise me that way, man. You know, she raised me in church, everything. So I'm happy just be on back on the path I need to be on, you know, because it's just, you know, life is short, you know what I'm saying? And like some people seek the thrill of this. And, you know, like I was saying, like a lot of people in the streets want to be entrepreneurs. I mean, I think that drug dealers want to work for themselves. A lot of them do want to work for themselves, you know, and don't want to boss over their heads and stuff. And like, you know, but we got to learn to channel that energy in a positive way to where we can live free, you know, and not risk everything being taken away from us. I mean, one of my cousins, the junior, you know, he told me multiple times, you know, he was big in the streets and stuff. He's older than me. He's like in his 60s, but he was like, man, I done been rich. I've been a millionaire twice, but he'd been to prison. Everything was taken away. So how can we work for something that can't be taken away like that? You know what I'm saying? And so like there's You got to think of it in a different way. I mean, I remember, man, like when I started following God, man, my cousin I used to sell drugs with, he was like, man, yeah, you turning your back on them and all this stuff. And then he was just like, if you scared, go to church. It's like, all right. You know what I'm saying? Like, I know what I experienced, and I know what changes I want to make in life. You know what I'm saying? So I made my changes, but you know, um, sadly for him, he's still in that cycle. I think he's still locked up right now, but he's still in that cycle where he lost everything he worked for. And me, I'm still building everything I worked for and legally I obtained it legally and um, have my rights to keep it and pass it on to my children. So that is the truth, man. Redemption is so sweet, brother. Praise God. Yes, indeed, man. Y'all about to bring us in the church on here, y'all. So Wall Street Trapper, I watch his stuff, but lately he pushing classes too much. Is awesome. He does free presentation, but I saw an ad about take my 400 class. How's that possible? Yes, indeed, bro. Yes, indeed, man. I'm out here. But yeah, so and that's kind of one of the things, man. It's like a lot of, like there's always so many freaking people pushing classes. You know what I mean? Like, and and it just gets so oversaturated. I mean, you get like so many people, oh, sign up for my class here, sign up for my class there, or take this class, click this button, you know what I'm saying? And it's just like me, I just want to keep my channel simple because like I just think that I don't want to have all of that I don't want to have all that stuff like just oversaturating my channel and stuff. you know I want to keep stuff free. Obviously at some point I'll put some things behind a paywall, but I'm not trying to like. The issue is that this is my main issue. One of my main issues is that the last, I mean, we can argue the last 10 years, ever since the global financial crisis, when the Fed started quantitative easing, many people made money in the stock market. In the last 2 years, I don't know how many people became traders, but I began to see everybody becoming like stock traders and technical analysis and all these things. The issue with that time was that the Fed was printing so much money. M2 money supply was at all-time highs. Uh, checks were given out to everyone, so liquidity was just flowing so smoothly into any asset. You could throw a dart at a board and score big. You could invest in any crypto with a huge market cap, and so many coins and hit big. And so like it didn't take as much skill. You know what I'm saying? Like, and so then I mean you begin to see people get wiped out when the Fed start doing this. And so yeah, neophyte, that's real. Like I was listening to interview with E.B. Tucker a while ago, and he said that he knew that the dot-com bubble was a dot-com bubble when he had the waitress or the waiter from the restaurant that he was at came to him and wrote a stock pick on a napkin and was said, "Hey, invest in this stock." So if there's everybody, can just pick a stock and get lucky, and people thinking they're experts, so for me, it's like, okay, like I'm trying to be more of a long-term investor, being around, Rick and all them, like it just opened my mind up more to like, just like, let me stick with, you don't have, everyone doesn't have to be a trader. I mean, that's the big thing. Everyone doesn't have to make money fast. There's multiple ways up the mountain. And what I've noticed is that the mentality of many people is that they want to make money fast. They want to get rich quick. They don't want to do the hard work. They don't want to implement discipline. They don't want to cut back on their spending. They don't want to spend less than they earn, right? They want to spend more than they earn. They don't want to, invest in pay themselves first. Like, and so like it's just, for me, it's like, yeah, I'm trying to implement discipline first, obviously getting out of debt, investing, paying myself first, all those things, right? That's what I'm trying to do. And then from that, just keep applying the same principles and become wealthy, So like, I'm playing the long game. Neophyte said, I have a running joke with my boy when he tells me about buying stocks trending, it's time to sell. Yeah. People say that with Jim Cramer all the time, CNBC. Like they got a Jim Cramer inverse ETF, and they say every time Jim Cramer recommends buy something, that means you better sell. You better do the opposite of Jim Cramer, what he says. And so, yeah, that's a running joke on that for real. And it has some validity to it too as well. So yeah. So I'm playing a long game, y'all. I mean, some things, I am speculating with, which is where I can make money. Obviously I told y'all about crypto and stuff, but I'm really focused on just building. I'm focused on building, buying assets. So for example, Scott Melby, CEO of Uranium Royalty, he told me that his financial advisor told him one time, he said his financial advisor told him, like, hey, change your mindset with investing and get in the habit of accumulating assets. Think of it as you're accumulating assets versus like spending. So Scott told me, he was like, hey, I lived two levels below my means of what I made, and he bought assets. Right. And he got addicted to accumulating assets. And then, he he made a lot of money that way. He accumulated a lot of shares and all that stuff that way. So like, think of like when you're buying something, you're buying an asset, And so that's kind of my mentality right now. It's just let me accumulate assets. All right. All right, y'all. I gotta get going. I gotta go to the fam and stuff. Man, I had a good time with y'all, sharing my story, hearing from y'all, joking, laughing. This was amazing. Let's do this again. All right. Be on the lookout for that interview coming in the morning. I think it's in about 7 hours, whatever time zone you're in. And yeah, be on the lookout for that, y'all. Let's see, brother. Everything you say in terms of conviction, discipline, playing long game summed up to an elephant money. DeFi grown when been big in the hurt. I still gotta check it out, man. I saw the interview that you sent me. But I have to figure out the crypto wallet and such so I can play around with that. I mean, if you can give me like a step-by-step thing on how I can get in there, I think you have to have Uniswap or Pancake Swap or something like that. So I have to jump through all those steps. Did I talk about LAC stock, Lithium Americas Corp? No, I did not talk about Lithium Americas, but I mentioned that I interviewed Sean Wade of Power Metal Resources. So Power Metal Resources, they have an exploration project, and they focus on a lot of different metals. And they just put out a good newsletter. So I'll show y'all here. They just put out an announcement on it. Boom. 3-day weekend, y'all. So, so I'm gonna stay up a little longer. Let's go over to X. I don't even think, I think Elon trying to get X.com or something. Somebody got that domain name. It's probably like worth so much money right now. X.com. Elon probably trying to buy it off of that person. Bet. All right. So Power Metal Resources, exploration and project development update. So we did talk about this company because this company was at Rick's symposium. So this is who I interviewed Sean Wade. You can see the interview up now. But they focus on a lot of different metals, uranium, lithium, and many others. So their Northwind Lithium project, the 100% Power Metal owned Northwind Lithium project, is considered by the company to be prospective for the discovery of pegmatite hosted lithium mineralization. Lithium accounts for approximately a quarter of the world's lithium production. The exploration program in Northwind was outlined in the company's announcement on 10th August. The exploration work program is now complete, and a total of 189 soil geochemical samples were taken. So they're pretty much talking about their project and how it's just coming underway. So like I'm investing in like the smaller companies like this where I can get massive gains. Obviously, Lithium Americas is decent company, but I'm more focused on like the smaller caps, like Power Metals. Good to catch the live. Appreciate y'all. Blessings, brother. Yeah, email me, Marius. Email me. So yep. Yeah, I got Telegram too. Just email me. We'll connect that way. All right, y'all. Y'all take care. Peace.